The first signs of a trend reversal, changes in the order books, and new data coming in from on-chain metrics. Are you curious about what the charts are showing now and why they made me decide to go long? Let's get started. Hey, welcome to another episode of the Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and a selected altcoin. We get together and take a look at the charts from three different perspectives: technical, on-chain, and fire charts. And as a result, you won't find such condensed and diverse analytical knowledge anywhere else on the internet as what we serve up here. Thanks for appreciating it, because that's one of the reasons our channel has just surpassed 60,000 subscribers. That's a huge number, and it's thanks in part to you. But I also know that many people who regularly watch Kanga Trends haven't actually subscribed to the channel. So now is the perfect time to hit that subscribe button, give us a like, leave a comment, whatever you feel like. And remember, this is really important. The content in this video does not constitute investment advice. For advice, consult a licensed advisor, or just do what I do your own research. If you're good with that, grab your coffee, and let's dive into the analysis. Of course, we're starting with Bitcoin. What's happening on the chart? Well, first of all, we can see a very dynamic downward move, basically a very strong downtrend, which results in Bitcoin dropping to valuations below $110,000. In other words, below the level we previously identified as a pretty significant support. But already last week, I pointed out three more support levels that Bitcoin could reach. And look out, it's already stopping at the first of them, and it's doing so in a very clear way. Here we see the area of $107,900, where the wicks dipped slightly below, but every time, all four of these candles I'm pointing to now close above that value. And that means there's very strong demand here. This demand is coordinated exactly with the area we previously marked as the consolidation zone, which occurred right here when breaking out of this descending channel. And right now we can see that Bitcoin is bouncing, and reclaiming $110,000. This is a very important area because it is our potential, highly significant support. Additionally, this is happening simultaneously with the activation of the TD sequential indicator, which is actually one of my favorites, and it very clearly shows us that a trend reversal could occur at this point. But watch out. A very similar pattern and the ninth candle of the TD sequential indicator actually appeared here on Friday, August 22nd, but unfortunately, during the trading session, it faded out. Why? Because this trading candle right here, the very tall one, closed above the fourth preceding candle. Well, the one just before this candle. What does that mean? Basically, that's a reset of the indicator. If the TD sequential closes, or rather, if this candle closes above the fourth preceding one, meaning above this candle in a downtrend, I want to emphasize that then we have a complete reset, and in this case, a possible continuation of the downward movement. That's exactly what happened. And at this point, we have the ninth candle lit up for the second time, but this time it has stayed on the chart. What's more, in situations like this, it's rare for the ninth candle to light up twice and for either of them to signal a reversal or a trend change. That's why I think this is a good moment for Bitcoin to bounce back and shoot upwards. Personally, I'm taking advantage of this moment, and I've opened a long position, but more on that in a moment. And we can see very clearly that Bitcoin is currently struggling with the $112,000 level. This, in turn, was a very important resistance level. Just a bit earlier, it was actually support, but now it's become resistance. Now, unfortunately, we have to face this value and try to break through it. We can also see that the 100-day moving average, which is our yellow line, is exactly in the area of $112,000. Unfortunately, this strengthens the resistance, so a price pullback, followed by a short consolidation and then another push upward, is theoretically very likely. What's more, I notice on this chart that there's actually some potential for an inverted head and shoulders pattern forming. Here we have one shoulder, here we have the other shoulder, and here potentially the third. But watch out. This potential is much higher on lower time frames. If we switch to the 4-hour chart, right now we're looking at the daily, then we would see quite clearly that something like this is forming. But it's not a complete head and shoulders yet, because we're still missing this shoulder here. But the volumes, and this is very important, are increasing, and rising volumes confirm the willingness for Bitcoin to break through this level here. So what does the RSI say in this case? We pay attention to what's happening on the indicator, and unfortunately, we keep seeing Bitcoin moving below the 50 level. Yesterday's daily close was around 45, so still below, but that also means that if today, for example, during the ongoing trading session, Bitcoin breaks through the level of 112,000 and the 100-day moving average, it doesn't necessarily have to fully break through the 50 mark on the RSI. If in this case the 50 mark is reached at the moment when Bitcoin, for example, is already aiming for the 50-day moving average, then that gives us the potential for a rebound from that point, test of the 112 level, and a breakout to the upside. So, in my opinion, Bitcoin looks positive at this moment, although I would still say it's a bit risky, because as we've pointed out, there are some very clear resistance levels here. Nevertheless, let's also remember that exactly 2 weeks from now, there will be a Fed meeting, at which interest rates will most likely be lowered. In my opinion, this is not yet priced into Bitcoin, which is why I see a pretty clear and quite significant chance that Bitcoin will still surge upwards, precisely in anticipation of this event. And now, Bitcoin on Fire charts. Fire charts compile the largest order books from major crypto exchanges. A blue line shows the price of Bitcoin, and various horizontal lines. The ones above the current price are lines with sell volumes. The brighter they are, the stronger they are, and the buy volumes, similarly, the brighter they are, the stronger they are, and they are located below our blue line. And we can see very clearly that these buy volumes are starting to increase, especially in the last few hours. Here, at the level of $110,000, some buy orders are appearing, and the lower we go, down to the level of 105, there are basically more and more of them. Yeah, those white buy volumes are quite significant right at 105. At this moment, the 105 level holds a volume of just under 18.5 million USDT waiting to buy Bitcoin in case of any potential turbulence. But let's remember that these are only proportions of what's actually happening on the exchanges. This is not the total volume of all cryptocurrency exchanges. Besides that, we can also see that certain resistances are forming. The first one appears around $113,000, and these volumes are really quite small, to the point where it's even hard for me right now to pinpoint the exact value and tell you exactly how much. Well, just under 7 million. And then the next resistance, which is more noticeable, is at 115,000. And at 115,000, we have just under $12 million, in this case, in Bitcoin, waiting to be dumped onto the market. So theoretically, the supports are currently stronger than the resistances, but at the same time, we don't see anything on this chart to suggest that they're particularly strong. By the way, we can also see this uncertainty on the CVD, because there aren't any strong buying moves on the CVD, although right at this moment, as we're recording this, I can see that the whales have just woken up. The whales, that is, our brown line, are those wallets holding between $1 million and $10 million, which are specifically meant for buying Bitcoin, and right now, they're starting to rise a bit here. It's very possible that this move is a long-term one, but to assess that, we need to observe it over a longer period. For now, we can see that they're rising, so at this very moment, I expect that the price of Bitcoin has also ticked up slightly. The current situation on the Bitcoin chart made me open a long position, but before I talk about what's happening right now on my futures market, I'll mention what happened last week, because back then I also talked about a long position, a long that started from the $110,000 mark with 20x leverage. Of course, on Kanga. I was keeping everyone updated in real time about how I was handling my position, whether it would be triggered or not, because it was an order placed in the order book, basically just waiting to be filled, since the price was higher before. And that's exactly what happened. It was triggered and very quickly turned into a profitable order, and at one point I was up by 50, almost 4% in unrealized gains. Given that situation, I decided to set a stop loss in a profitable position at 11,600. And I also set a take profit at 116,500. As it turned out later, 116,500 wasn't reached, but my stop loss was triggered, which meant that in the end, I came out of it with a profit. Luckily, I set that stop loss. And that profit was exactly 28.5%, so pretty good. So besides that, what am I doing right now? Well, right now I'm also in a long position from almost the same price, because here we're just under $110,000, and again, with 20x leverage. At the moment, I haven't set a stop loss yet. I'm watching how the price action will play out, but we have a liquidation set a little above $105,000, so it's pretty low and probably shouldn't be reached, considering the factors I'm currently observing on the chart. In any case, I'll keep you updated on how my positions are shaping up, what they look like at any given moment. So if you want to stay up to date with that kind of stuff, be sure to check out my Twitter. But remember, what's posted there also doesn't constitute investment advice. I know that sometimes some people would like to do copy trading, but be careful. I can make mistakes too, and not just once. So really, if you want to follow me, I encourage you to do it wisely and treat it more as inspiration rather than just copying what I do. Ethereum also looks very favorable and inviting for a long position. Ethereum, which is lighting up the 9th consecutive red candle on the TD indicator chart. Basically, it's doing exactly the same thing that Bitcoin did. However, in the case of Ethereum, this candle could be invalidated very quickly. Why? Because if Ethereum rises above the value of 4,400 and closes the trading session at that level, well, in this case, a reset will occur. A reset just like the one we basically had over a week ago with Bitcoin, which caused the declines to deepen. That's why, in my opinion, I'm still approaching Ethereum a bit cautiously for now, even though I see a lot of growth potential. But I still have my long position set up, which I also mentioned on Twitter, as a pending order waiting to be executed from around the $4,000 level. Here, at the $4,000 level, we have a very clear horizontal support. In addition, right now, the 50-day moving average is also reaching that area, or actually already breaking through it, which often acts as support for the price, so here we have double support. And besides that, we can see in this case that the RSI is doing a great job of holding the 50 level. And pay attention. Even if Ethereum drops to the 4,000 level, the RSI could still defend the 50 mark. Why? Because this indicator refers to the closing price of the candle, not what happens during the day. So, for example, a wick pulled down to 4,000, a liquidity grab, and triggering longs or just regular buy orders could actually keep that level intact. In this case, that would be beneficial for Ethereum. Then, for sure, the 9th bearish candle would hold, and that would shape a more reliable, I'd say, trend reversal. For now, there's no such certainty. I see that Ethereum is reacting quite well during the day, rising by almost 1% at the moment. In my opinion, the resistance level is still very clear and is set at just under $5,000, which is where the previous all-time high was reached. I still think that Ethereum might consolidate for a while between 4,000 and 5,000. This is the kind of range where I personally will be very eager to trade when those critical points are reached. In the middle, kind of in the middle of this formation that we see here, I try not to trade. I don't buy what I currently see on the chart, because I don't want to chase the price. I wait until basically the individual support or resistance levels are reached, specifically for that reason, so I can take my own actions. And now, Ethereum on fair charts. And here we can see very clearly that Ethereum is moving within a pretty significant trading zone, where there are currently more resistance levels than support levels, at least for now. Maybe traders want to keep the 9th bearish candle of the indicator in play, specifically so they can trigger longs a bit later. Besides that, it's worth paying attention to what's happening on the CVD. On the CVD, once again we have the brown line, which represents the whales. And these whales are currently buying. It's also quite clear these are aggressive purchases. The other market participants are staying on the sidelines and are probably watching to see what happens next with the price. Time for an altcoin, and this time it's going to be Polygon. Polygon, which in my opinion is behaving quite interestingly on its chart. Just a few weeks ago, we were talking about Polygon. We said that basically nothing was happening here, it was boring, and there were no signs of a trend reversal. But now, something is starting to change, and it's changing in a very interesting way. First of all, Polygon has been in an uptrend for quite some time now, over the past few days, while the crypto market as a whole has basically been in a downtrend. And Polygon is breaking through certain peaks, local ones that were here around, I see, 25 cents, and we should also consider this peak as a solid resistance. 27.7 cents, basically, if I can put it that way. And we can see that this is probably a kind of inverted head and shoulders pattern. Maybe not as complete as I would like it to be here, but there is such a formation on our chart. Let's also check the volumes to see if they confirm the pattern for us. Unfortunately, the volumes don't want to load, at least not on the chart I have in front of me right now, but still, we can see the structure. Here we have the head, the left shoulder, the right shoulder, a bit of consolidation here, and then a breakout. And notice, this breakout is above the previous peaks we observed. So now Polygon is most likely moving slightly down, because we can see that this candle is currently red in order to test these supports, basically the area around 27 cents and a bit lower as support, and maybe it's aiming to break out higher. It looks pretty good on the moving averages, because the 50-day moving average, which is our red line, was broken a while ago and is currently acting as support. Besides that, the 50 level on the RSI is also acting as support and is nicely pushing Polygon higher. It's also worth looking at the broader perspective, in this case, and paying attention to this peak. Maybe I'll stretch the chart a bit so it's clearly visible. I'll remove the RSI now, since we won't be discussing it. Basically, this dip right here, this low, is actually the area that was marked out back in November 2024, and it's currently being tested from below. So right now, Polygon is encountering resistance here. If this area is broken through, if Polygon rises above the current price it's at now, which is somewhere around 30 cents, then there's a very good chance that the trend we're seeing here, this local trend, will turn into a long-term upward trend. So in my opinion, Polygon might not be worth trading right now, but it's definitely worth keeping an eye on. Traders are reacting to what's happening on the technical charts, and we can see this very clearly through fire charts, because for just a few hours now, there have been more and more buy orders coming in exactly at the 26-cent level. Here we can see this white volume profile, which is very significant, and it's the defense of those peaks that were reached quite recently. Maybe this is, or will be, a potential good opportunity to actually go long. I will definitely be considering it. If I decide to take such an action, I'll let you know about it as well. Besides that, it's worth noting that there are also some selling volumes appearing around 30 cents. So again, these are the areas around that bottom which was set back in November 2024 and is now being tested from below by Polygon. So there is resistance here, but what's important, actually very important, is that these resistances, just judging by the color coding, are now lower than the supports currently at the 26-cent level. So this also looks quite favorable here. And what does the CVD tell us? The CVD tells us that, well, buyers are starting to show up, red wallets. Maybe they were a bit active here recently, but now they're flattening out a bit. They are responsible for purchase volumes ranging from $10,000 to $100,000, and as we can see from their activity, there is some movement here. And those purple wallets were also active, that is, the ones with balances from $100,000 to $1 million, waiting to buy Polygon. They are currently pulling back a bit. Let's say that for about the last 24 hours, there's been a downward trend here. But in the previous days, we did see some increases. Most likely, these wallets have noticed that we're at a resistance level, so they're waiting to see what happens and might jump back into the game any moment now. If you'd at least like to check your altcoin, remember, it's a very simple thing to do. All you need to do is register on Kanga, and you'll find the registration link in the description of this video. Browse through the cryptocurrencies we have, pick the one that interests you the most, and let me know about it in the comments. Just remember these 3 basic rules. First, it has to be a crypto from Kanga. Second, it can't be any memecoin. And third, it can't be KNG either. So you know what to do. Comments are open. Go for it. What's happening with the Bitcoin ETF in the United States? First of all, we can see that these volume bars are maintaining their heights. Whether they're buy or sell volumes, they remain relatively small, at least compared to what was happening back in June, basically up until mid-July. Nevertheless, this current week basically has only one buy bar, just the one that happened basically yesterday, which was Tuesday. And we can see that purchases took place here, and these purchases are a bit higher than the average from the last few days. So sentiment is coming back again. Perhaps once again ETFs are watching technical indicators and see what needs to be responded to, and they are reacting to it in a really effective way. And now a quick overview of on-chain metrics, and today I've prepared 3 of them for you. The first one is an overview of stablecoins in circulation, basically those coins that are used to buy Bitcoin and other cryptocurrencies. If their number is increasing, then we know that the buying power is constantly growing. And here we see the orange line, which represents the indicator, and the gray line, which shows the price of Bitcoin. The behavior of the indicator is in a constant uptrend, a very strong upward trend, which tells us that demand for Bitcoin and other cryptocurrencies is still present. It's also worth taking a look at the NUPL, which stands for Net Unrealized Profit and Loss. Unrealized profit and unrealized loss is an indicator of critical deviations, which tells us, for example, that we might be in the final phase of the Bitcoin cycle. Currently, the NUPL is in a reset and at this moment is reaching a value of about, let me check exactly, 51 and a little bit more. It's worth remembering, though, that the peak values for this bull market, the ones that triggered those bigger corrections, were around 63, 64. On the other hand, the values that are historically critical for NUPL, which usually signal the end of a bull market, are around 74, 75. So here, the potential for growth remains very large, but for that growth to happen, the Bitcoin balance on exchanges would also need to shrink. But right now, we can see that basically since mid-July, this balance is actually in an upward trend. However, just a few days ago, we actually saw a kind of breakdown here. Now, unfortunately, the amount of Bitcoin is increasing again, but we will keep an eye on this indicator, because I expect that very soon, once the sell-offs from wallets, which until recently were basically dormant wallets, come to an end, this indicator will start turning downward again. We will keep updating this. Time for a contest. First, the rules. Present your own analysis of one of the cryptocurrencies I discussed in today's video, so it can be Bitcoin, Ethereum, or Polygon. Share your technical perspective, on-chain, fire chart, sentiment, fundamentals, whatever you like, and remember, you absolutely don't have to agree with me. The author of the most interesting comment posted by Friday at midnight will win 20 KNG from me. And the winner for the previous episode is Bshadler21, who, of course, analyzed Bitcoin. Congratulations. Please contact support to claim your prize. That's all for today. If you enjoyed it, and I truly believe you did, and this is your first time here, be sure to subscribe, give a thumbs up, leave a comment, whatever you like. And please rate this episode on a scale from 1 to 3 for 1, where 1 means it's weak, bland, and you don't want to see me again. 3 for 1 means fantastic and you want more of this. And if you do want more, well, you know, I'll see you next week. Bye.